this particular session with me, we're going to focus on what the actual correspondents are saying and what suggestions have been forthcoming with respect to how they can re-enter the market of expanding correspondent banking services. And there is a push on the part of the banks, but again, as we discussed yesterday, there is a risk-reward analysis with respect to this. So at the end of the day, I think we're going to be looking at maybe new entrants into the correspondent banking services space, where the benefits of engaging in such a service and relationships is more significant and therefore more attractive for banks in the U.S. in particular, which is really the focus for us since we're here in the Caribbean and in South America. So let's begin the presentation. First slide, please. And as I indicated with respect to the introduction, we've already reviewed relevant issues regarding de-risking and the reasons for this phenomenon. So we're looking at what the correspondent banking perspective is. We see what the regulators in the U.S. think from yesterday's presentation. And again, that's a driving force, clearly, with respect to de-risking. And also we're going to be looking at what expectations we have as far as solutions. And I want to share with you some of the solutions that have been put forth. And we will rate what we think has been effective and not effective as it relates to those proposed solutions as we go forward. Keep in mind, as I mentioned yesterday, I think the issue of de-risking per se is over. De-risking has already occurred. Banks have gotten out of the space. They have severed relationships with all the banks they're going to sever their relationships with. So what we really have now is the problem of now reestablishing correspondent banking relationships. So it's not so much de-risking anymore as it is addressing the risks so that we can better the correspondent banking services throughout the world. So let's start. Next, please. Okay, so I want to start with a report from the Financial Stability Board. As you may know, the Financial Stability Board is a nonprofit organization based in Switzerland. It's comprised of G20 economy members. And their goal really is to, as the name implies, ensure stability and progress throughout the global financial sector. And they recognized that there was an issue with de-risking and the lack of banking services for respondent banks outside the U.S. So they commissioned a study, and the results were not surprising, obviously. They indicated that almost half of the emerging markets and developing economies surveyed had experienced a decline, and I would say a significant decline, actually, in correspondent banking services. And there you see on the screen that the regions most affected by this de-risking were in the Caribbean, also in the East Pacific Asia, Eastern Europe, and Central Asia. There was also it's not mentioned here, but there was also an issue with respect to lack of correspondent banking services in certain regions of Africa. Okay, so the FSB's conclusion was the following as far as pure numbers are concerned. And again, this should not be any surprise to particularly the examiners and regulators in attendance today, because you've seen what your licensed entities are doing as far as maintaining these relationships. So you, better than anyone, would know decline in correspondent banking relationships. For as an example, the FSB noted that there was a 4.7% decline in active correspondents, meaning actual correspondent banks that no longer were providing the service. There was a 2.4% decline in active corridors, which means that certain regions or jurisdictions were completely lacking in those services. That means that banks that maybe provided services to a particular country no longer provided services to any bank in that country. And the FSB picked up on that and noted that there was a 2.4% decrease in those types of de-risking results. 15.5% in overall correspondent banking relationships in the 5-year period that was analyzed, which is very significant. However, the decline was more appreciable in certain countries. So, for example, the largest hit regions were Melanesia, Polynesia, the Caribbean, South America, and Northern Africa, which I mentioned earlier was a region where that also experienced hard-hit de-risking issues. And the range in that was between 28 and 40%. Incredible, but that is what has been happening. And I think based on yesterday's discussions and Farida's session just a moment ago, we understand the reasons. So the issue is now, what are some of the solutions that can be implemented? And right now we're discussing what the correspondent banking side is suggesting. Next slide, please. Okay, so we created this table to give you a sense of what some of the concerns are and what solutions are being proposed, what action has been taken with respect to the proposed solution, and give it a grade to see where we're at as far as addressing the lack of correspondent banking services. So we start off with the transfer messaging. I think Farida alluded to this earlier, and that is really with respect to wire transfers, which tends to be one of the more risky transactions or financial services provided by a bank, because it's the quick movement of money, and in many cases, the quick movement of large sums of money. And that tends to be one of the more high-risk transactions, as you know. So in order to address the risk inherent in wire transfers, the concern, obviously, to address is unmasking the underlying parties to a transaction, improve the transparency of cross-border payments. So what's the action that's been taken? Well, pretty good one, actually. SWIFT, a couple of years ago, introduced the MT202 Cove, which is a cloud-based platform that expands on the ability to generate and obtain information. And I see I'm getting a couple of questions here. I'll address them shortly. But as it relates to the SWIFT messaging, you would think that this was an easy fix, and I think it was. The issue was just create more fields for more information. I mean, it was as simple as that. Obviously, there are technical issues. SWIFT obviously is a coding program, so you want to make sure that you universalize all of the code so that every country is speaking the same language, similar to how air traffic controllers now all have to speak English because of tragedies that have occurred in the airline industry as it relates to not being able to communicate around the world. So the universal language for air traffic control is English. We need a universal code for SWIFTing. And so it took a while, and they get high grades for having developed this. And I think it addresses the concern of unmasking parties. Information sharing among financial institutions has been a concern. The goal is to foster cooperation among financial institutions to assist in detecting suspicious activity and also to enhance customer due diligence. In the United States, this is really not an issue. There's actually a program under the Patriot Act 314B, sections 314B and sections 314A. 314B in particular is a voluntary program where financial institutions agree to share customer information when it relates to potential money laundering issues between financial institutions. That is not the case outside the United States. The Financial Action Task Force has actually addressed this by issuing Recommendation 18 that encourages internal policies allowing multinationals to engage in this type of information sharing. This, by the way, is also a concern and a focus of regulators. So they're looking at it from their perspective, and Farida alluded to this particular. And I must say that the grade that this issue receives is a low, because we still have legal impediments outside the United States, and not just the Caribbean, by the way. There are legal impediments in many countries around the world that do not allow for this type of information sharing at this time. But as it relates to correspondent banking, it is expected that governments around the world start addressing this type of exchange to facilitate better relationships between banks in the US and banks abroad seeking to have correspondent banking relationships. Information sharing among countries. This obviously involves the ability of states to work with each other on identifying illicit activity, obviously from a law enforcement perspective, but also from a regulatory perspective to engage in cooperation agreements as far as indicating what may be of relevance to a particular country. And this doesn't necessarily have to do with sharing customer information or bank information, as it is more just letting and having a bilateral relationship between countries, an open policy, if you will, to ensure that countries know how the regulatory schemes are working in a particular country. That would be fabulous. And in fact, there are many memorandums of understanding between countries. So it gets a grade of a medium for now, and only because there aren't as many MOUs out there as we could have. But clearly, to have an open discussion, have better communication between regulators around the world does help as far as familiarity is concerned in ensuring better outcomes for what is becoming, a huge global problem as far as correspondent banking or the lack thereof. Training framework. The issue there is that we want to make sure that bank regulators around the world have adequate instruction and know what they're doing, quite frankly. I mentioned that yesterday that there's a focus by FATA on developing countries and ensuring that regulators in developing countries get up to speed on AML and CFT issues, and also just better understanding of how cross-border relationships work. But that's not limited to those countries or to those regions. Take it from me. I work with regulators in the United States. They can also use training because there's a lot of misconception, a lot of misunderstanding that they would be well advised to ensure that they are adequately trained and are able to engage in an examination of a bank that happens to have respondent bank relationships, understand those relationships, understand the risks involved, and properly gauge whether the U.S. bank is performing in compliance. As far as other countries engaging in this, I can tell you that the technical assistance program from the IMF focused on 1/3, 37%, more than 1/3, 37% of their technical assistance missions were for banks in the Americas and the Caribbean. So there clearly was a focus with those banks, and rather those regulators, because again, there was an issue with lack of correspondent banking in those regions. Remember, we looked at the FSB's survey, and in the Caribbean and those other areas, the decline was between 28 and 40%. So clearly, IMF took notice of that and put about over 1/3 of their resources in their technical assistance program to the Caribbean and the Americas. So we have to give that effort a medium at a minimum. We don't give it a high because obviously it hasn't resulted in addressing fully the issue of de-risking and lack of correspondent banking, but the effort is there. And I understand that more countries are getting involved in those TA programs. Outreach and clarification. Again, this has to do more with ensuring uniformity with respect to the issues that are out there. I would give this a high grade. Organizations like ASBA, for example, these workshops that we're engaged in and other types of outreach programs are clearly important. And from our, my perspective anyway, I think it highlights on a consistent basis what it is we're dealing with and doing it on a timely basis as well. So again, I'll give that a high grade, but because of the persistence of the lack of correspondent banking relationships, we also have to figure out how more effective that can be. Next slide, please. So what's being done here with respect to these other targets and proposed solutions? And you see 4 additional ones here. There's a reassessment of the business model. What does that mean? Well, I think banks, and again, this is from the correspondent banking perspective, is it worth getting into or maintaining this line of business, given some of the issues that have occurred as far as enhanced compliance? But there are other factors too that touch upon the risk-reward benefits, if you will. And that has to do with what at times was a driving force in correspondent banking. It was tied really to private banking, if you will. So with the advent of FATCA in the US, where US holders of accounts abroad now were subject to their information being disclosed by foreign banks, or the foreign bank would risk having a correspondent banking relationship in the US, with common reporting standards and other laws, international agreements that require disclosure of account holders. Well, you know what this has done to the Swiss bank industry. You know what this has done to the private banking industry in the Caribbean. I particularly have clients that have closed shop in the Caribbean that were fully vested in providing private banking over the years. And the fact of the matter is that many clients now don't see the need because their information is not going to be private. So they either bank at home or find some other alternative where they can deal with their assets. And oftentimes this was really more tax avoidance than anything. But as far as addressing it, I would give it a medium. Multinationals have closed their relationships. And the issue of the banks maybe reestablishing, and I had a question earlier from someone, whether or not there are examples of banks in the Caribbean in particular that were de-risked and have then reestablished a relationship. I know of current banks in the Caribbean that are establishing correspondent banking relationships with new banks. So I assume that is a positive issue. And of course, that doesn't stop there. Many banks are seeking more than one relationship for obvious reasons. If you have one and you lose that relationship, then you have none. If you have 2 or more, well, things are a little bit easier if you lose one. So, but clearly not enough as we would like. And I'll get into a little bit as to who it is that's providing these services in a moment. Shared methods. This deals with creating efficient utilities. One of the things that we've come up with is similar to the SWIFT messaging, is efforts are underway to use legal entity identifier, make sure that we understand and have the ability throughout the globe to ascertain what companies are out there, who are the owners, et cetera, Yesterday, we talked about the U.S. having issued the Transparency Act, the Corporate Transparency Act, which is going to require every type of business to disclose who their owners are, those that have a 25% stake or higher. So it's becoming more transparent. So we give this effort a high grade. Cost of compliance, the concern is, can we lower it? The quick answer is no. According to a KPMG report, between a 4-year period, compliance costs had risen 53%. So the effort of lowering costs, that's going to get a low grade because costs only going to go up. It's just the nature of this business. And then the culture, which is to address the perception that certain regions are unbankable. The mutual evaluations from FATF demonstrate active follow-up to the concern, yet we haven't really seen any type of proactive solution from those studies. We know it exists. We know perceptions are strong. And really what we're seeing is more individual banks going at it as opposed to a region going at it. And that sort of piecemeal approach doesn't really work globally anyway to solve a global solution, a global problem rather. Next slide, please. So the drivers causing the withdrawal, this is from the correspondent banking vision. And I know that Farida mentioned in her presentation that from the regulators' perspective and what they're seeing, the drivers were compliance, lack of customer sharing of information, AML deficiencies with the respondent banks, the foreign banks, and a lack of supervisory efficiency around the region. And that clearly is the case. But I can tell you what the drivers are from the correspondent banking. And there are 4 areas as well: compliance-driven, regulation-driven, respondent-driven, and appetite-driven. Compliance-driven is what it is. It's obviously concerns about making sure that locally in the U.S., the banks are compliant. There are strict regulations. There are requirements for engaging in correspondent banking services. In fact, there are requirements for every type of line of business. But when you engage in correspondent banking, because of the risks involved, there's more of a requirement as far as the type of programs and controls that must be in place. Regulation-driven, it mirrors really the internationally imposed sanctions on a correspondent bank. So if a U.S. bank, and by the way, probably all U.S. banks, probably all the major U.S. banks get in trouble from time to time. So when you are facing a consent order or you're dealing with some deficiency in your bank, it may not be the best time to start expanding your correspondent banking line of business because you're dealing with another deficiency, and regulators will not look kindly on you getting into new lines of business when you have to deal and correct issues that have been identified in other areas. We also hear lack of clarity with respect to requirements. It's something that we discussed yesterday as far as, the memo not getting down to the field examiners. There are agency requirements and agency permissions on how to deal with this, but there's a disconnect between what the field examiners are telling the banks and what the stated policy is of a particular agency. So that becomes an issue. Respondent driven, obviously, when you look at U.S. banks, they look at what the region is all about. They'll look at designations of corruption, the transparency of a country, the customer risk of a country. So all of that takes into account decision-making, and the banks will obviously make a decision many times based on how comfortable they are with a particular region. I can tell you, not to put Pakistan on the spot, there are risks with every country, but I have a particular bank in the U.S. that's looking to bank 2 banks out of Pakistan, and the only thing holding them up really is the issue of terrorist financing. But the banks themselves are very good. In fact, they've had correspondent banking relationships with the bigger banks in the US. But that's really the holdup right now, whether to move forward and the perception that that may create with the bank's regulators. But from a compliance perspective and a due diligence perspective, those two banks pass with flying colors. But then again, you have that issue, and that can be something that may not even be resolved because it has nothing to do with the banks themselves. It has to do with the jurisdiction that they're in. And then, of course, appetite driven is the last one, and that's risk reward. So we talked about yesterday, risk reward for who? If it's for the big banks, these lines of business mean nothing to them. No one particular line of business of any major bank makes a dent with their bottom line. So when we're looking at new entrants, and we'll look at in the next slide, please. Next slide. Thank you. So we have new entrants that are smaller banks, mid-tier banks, smaller banks, and the risk reward for them is more appreciable. So they're willing to take a risk in going in and developing their platform and their programs to engage respondents who need these types of services. A couple of things before we wrap this session up. The Clearinghouse, as you know, is a organization of U.S. banks and other banks around the world that also look at this issue. And as early as December of 2015, they recognized that the de-risking phenomenon and the attendant risks of banking reflect the mutual and joint responsibility of the public to mitigate that risk. So again, this is the issue of the two banks in Pakistan. Nothing to do with the banks themselves, but there has to be a joint effort, public and private sectors, to address what is often a perception issue for correspondent banking. Next slide. And so that we don't forget that these issues of risk are not imagined. It's always good to throw in a little example of what happens when people fall asleep at the wheel with correspondent banking relationships. So I like to always bring out the Danske Bank a case where the Danske Bank was involved in a money laundering scandal where they were able to process about $234 billion, approximately 200 billion euros, in suspicious transactions by thousands of non-resident customers, particularly from Russia and the Soviet states, oligarchs, I guess. That's not the issue. The issue is that Swedbank, often considered the cleanest bank in the world, got caught up with this because they had a correspondent banking relationship with Danske Bank. And Danske Bank, through that relationship, processed $4.3 billion of what appeared to be dirty money, and somebody was asleep at the wheel with Swedbank. So the issues of risk and getting in trouble and having reputational damage to your bank are real. So these are some of the issues that banks in the U.S. look at as well, because anytime you open up the door to a respondent bank, you are opening up the door to all of their customers. Next slide, please. So what are the short-term solutions and expectations? Well, continued technical assistance from the Correspondent Banking Coordination Group. The IMFTA is going to be imperative that they continue working with countries in this regard. We are, again, as I mentioned earlier, seeing an entry into the correspondent banking space in the United States by mid-tier banks and smaller banks who are, quite frankly, seeking profits from a line of business that can generate profits. So same thing happens with some banks in the US that I deal with that are also servicing money service businesses, also considered to be high-risk non-bank financial institutions, yet they're regulated, they're licensed, they comply with the same laws that the banks comply with, and as a result, I have many banks in the US who are servicing money service businesses, money transmitters, currency exchange companies, etc. And they generate fees, and they're addressing a lack of banking in that sector as well. So that is a good thing. And quite frankly, those are the banks that I would recommend respondent banks to look at. If they are servicing money service businesses in the United States, companies that are already engaged in cross-border payments, companies that are already engaged in cash management, these are the banks that are more likely inclined to also look at respondent banks because it involves the same types of services, cross-border payments, wire transfers, and actually not even so much cash management as it is really receiving wires and processing payments. So that's a recommendation that I would always make, to look at those types of banks that exist out there. Next slide. Costs will continue to be high. That's an expectation, let's face it. As the KPMG report indicated, during that 2012 to 2016 period, compliance expenses increased 53%. And I only assume that since 2016, it's increased even more. So that is going to be a part of the issue. And again, risk reward. The US banks are looking to make money in order to establish a viable platform for servicing respondent banks. They need to invest and they need to get staff, and that drives up costs. So they then need to charge for that service. Also expect to use intermediaries, consultants, global agents, attorneys in the US that are able to broker some of these relationships. Use of US focused compliance reviews. I know that one of the ways I met many of the people on this panel is I work with banks in the US that need to know a little bit more about a proposed respondent banking relationship. So they will send consultants down to that bank and perform a review taking into account US standards and whether or not the bank is in compliance with what would be expected of them should a banking relationship be established. So you can expect to see more of that as a tool used by US banks as they consider banking relationships for foreign banks. And then automation of due diligence capturing, I think, is something that all banks need to be automated and have compliance filters that are on par with US standards. And I think the next slide is really more of a discussion slide, which is, what are your short-term expectations about Caribbean de-risking? And I would change that question a little bit and forget about de-risking, right? Because I already said de-risking is done. I think the question is, what are your short-term expectations about reestablishing relationships with US banks? And we've seen what the US banks are thinking, so I hope that that is a guide with respect to how we move forward. So I think that's all I have for now, and I want to thank you guys again, and I'll be around. I know I have another presentation tomorrow, and again, it's been a pleasure talking to you guys and answering some of your questions as they came in.